Are stocks headed for a blow off top, or are we about to come crashing down like we did back in 2008 and 2009? And I have a eerie similar price target to 2008 and 2009 that I want to share with you guys today about the potential blow off top. Now, it seems like not long ago when we saw a little bit of a pullback out here in the S&P 500, and a lot of that pullback had to do with Powell says the Fed does not need to be in a hurry to reduce interest rates. And now when we come over and look at the Fed watch tool, what are we seeing? There's only a 52.7% chance the Fed is going to cut rates by 25 basis points at the next FOMC meeting. And at the time of recording this video, that is only 24 days away. And we got to ask ourselves this question. If the Fed does not cut rates, will we see the S&P 500 coming right down here and potentially fill in the gap from the election night? Now, before we start looking at what that blow off top target would be, let's look at some other charts real quick. For instance, we come over and look at the 10-year yield versus the 2-year. Notice this red line right here represents when the market is inverted and when it's uninverted. Well, we've seen the yield curve steepening, the yield curve being uninverted. Now we are coming back, threatening to reinvert on the yield curve. Then we jump over and we take a look at HYG versus the SPY. And what do we see? Well, SPY is nearing all-time highs. HYG is slightly off that high here just a bit. However, when we look at the Dow Jones Industrial Average versus the Transportation Index, we get a slightly different picture. As the Dow Jones is nearing all-time highs, we also see the Transportation Index basically at the recent highs that we've seen. So we're starting to see transports follow along with the Dow Jones, which is a positive indication. Then we come over and look at the Fear and Greed Index this past week. We made it back into greedy territory all the way back to 61. However, should we listen to the wise man Warren Buffett when he says, be fearful when others are greedy, be greedy when others are fearful? Well, I think that we have the opportunity for a massive blow off top. And one of the factors out there could be the fact of, look at the price of Bitcoin. We've been talking about this last week on the stream. Will Bitcoin hit 100K while we're on stream? And we came very close. Bitcoin has had a high of 99,800. So as of recording this video, Bitcoin has not hit it yet. However, when we zoom this chart back here just a bit, we can see we have this monster ABC pattern on Bitcoin at 108,945. We also look at the most recent investor sentiment survey that we got this week, and we see the bulls drop down to only 41.3 of participants believe the market was going to be bullish. And we can see that the bearish bets were lining up a little bit more aggressive. However, when we jump back over here real quick, and let's look at a chart of the SPX real quick. We put this right over here, let's say to the weekly time frame. And what do we have? Well, the market's just kind of grinding up. This down week that we had wasn't that much of a large down week. And now this week, notice on the candle, are we closing near the upper end or the lower end? We are almost closing at the very tippy top of that candle. And it's looking more and more like we may want to go ahead and push up and out. Then we come over for the SPX. Notice we had this gap right over here. And now we've come down. We basically tested gap support. Now, are we about to set an ABC pattern on the way up? And no, this is not the blow off top target that I'm talking about, but that would bring the SPX to about 6,175. Now, if you're really doubting that we have a potential blow off top, I want to remind you guys of this stat right here, and it's showing that right now we're in a very bullish time of the year. If we look at the 7 weeks starting on November 12th, going all the way to December 31st, notice out of 33 occurrences, we have been up 29 of those times and only down 4. So if we're going to follow that path, we most certainly could see the S&P 500 going up substantially higher. Now, when we come back over and look at the SPX back on a monthly chart, I want you guys to pay attention right over here. Back in December of 2021, notice where the MACD level was. Now notice where we're currently at. We are currently higher than what we were over here. And from this area right up here on the chart, notice how far the market dropped. We had a 27% decline. So will we see the market essentially pull back once the blow off top takes place, possibly coming back and testing the swing point back from the highs of 2021? Or are we going to see a more deeper pullback out here in the stock market once all the truth comes to light about all the phony jobs they've been reporting to us all along? Now, here's a little conspiracy theory I have about the stock market. And the conspiracy goes like this. Back when we had the stock market crash back in 2008, 2009, I want you guys to pay attention. What was the low price on the S&P cash market? The low price was $666.79. Coincidence or not, if I put my cursor right there near the low, you can see 666. Now, if we go ahead and we fast forward in time, no, I'm not saying we're going to go all the way down to 666. I'm talking about upward targets. Would it be a little bit deviant? What if the market just decided to go ahead and continue to push on up higher? And what I mean by this is, could the market maybe make it to 6,660 on the SPX? Now, if we were to grab our Fibonacci extension tool, now I remind you guys, Apex having a massive 80% sale off all their valuation accounts, passing as little as 1 day, $85 activation fee across all account sizes. If you'd like to take advantage of this offer, use the link in the description box down below. Use promo code Mike at checkout. Now, if we were to grab our Fibonacci extension tool and we measure A to B equals C to D, that only gives us a price completion of about 6,145. However, if we fall somewhere in between the 127 extension and the 100, we can most certainly see the S&P 500 go to 6,660 before the end, or maybe even 6,666 before the blow off top finally ends. Now, if we come over and look at the economic calendar for next week, Monday, no major economic news slated. On Tuesday, starting off at 9 a.m., we have the S&P CS Composite 20 HPI. Then at 10 a.m., we have consumer confidence. We have new home sales. We have the Richmond Manufacturing Index. Then on Wednesday, we have the weekly unemployment claims. We have the preliminary GDP quarter over quarter. We have durable good orders coming out. Then at 9:45, we have Chicago PMI. 10 a.m., we have the core PCE price index, which is the Fed's preferred measure of inflation. We also have pending home sales, and we have the FOMC meeting minutes. So next Wednesday is going to be action-packed. And you know what? On Thursday, we have a bank holiday in the US. It's going to be Thanksgiving. So we'll discuss this on the live streams, if the markets will be open, and if so, to what time. Then on Friday, we have no major economic news to be released. When we come over and look at the dollar index, notice what happened on Friday. We finally completed our ABC projection right up here at 107.83. So now we're going to see the dollar start to pull back here just a bit. And notice, as the dollar was rallying, we have also seen gold on the move up higher. Gold now making it past this high volume area, making it into our minus development area. So if gold starts to turn here, that could set a larger ABC pattern on the way down. However, if we get through this area and through this next high volume area at about 27.57, then it looks more and more likely we're going to go ahead and take out the highs and make another run towards new all-time highs. And that would not be the slightest bit surprising if indeed we're going to have this massive blow off top. Next, we come over and look at crude oil. Crude oil also being able to lift up this past week. Now, making it towards this high volume area. Will crude oil be able to go ahead and break above 72.38? If crude oil can get above that price point, I then want to look for this gap to be filled at 73.85. Then we'll see if crude oil can continue to climb, maybe working all the way back up here towards the minus development area at about 79.50. Now, something we want to keep our eye on is Nvidia. Nvidia has been a hot stock. We know Nvidia has led the market for quite some time, but notice now we're starting to see quite a bit of weakness in not only Nvidia, but we come over and look at Google. Google on Friday basically closing an inside day, but we start to see that roll off the highs. Here's the election gap. We have filled the gap and we continue to go ahead and push lower. We take a look at Microsoft. Microsoft gap down and basically consolidating near these lower levels. And even as we take a look at Meta, you can see we're starting to put in a series of lower highs, high, lower high, lower high, and we're also making a series of lower lows. So we really want to be paying attention to SMH, right? SMH is starting to weaken, but you know what? XLF has been on the move. XLF has made a new 52-week high and maybe even all-time highs. However, we do have two gaps below us. At some point, will come back and get filled. Now, if we come over and look at the Dow Jones real quick, the diamonds really close towards making new all-time highs. And now we can see this pattern very clearly, right? The A to B equals C to D pattern. Now, there is a chance for the bears. Maybe we get a double top action. We come back down, and that would send us down basically all the way down here towards filling the gap. However, the markets around holidays, we know, tend to be more bullish than bearish. And we come over and look at the small caps. Small caps having another strong day on Friday, up 1.85%. And now we're right at the 78.6 Fibonacci retracement level. So if we break through that level, it increases the probabilities we're going to see the Russell 2000 making new all-time highs. Now, as we jump over and take a look at the Qs real quick, notice we have a gap above us we have not filled. We have a gap below us we haven't filled. So which gap is likely going to be filled first? You guys let me know in the comment section down below. Will it be the upper gap or the lower gap? Now, when you see the candle on Friday, we basically closed near the upper end of that range. And as we look at this, keep in mind, to the downside, we do have a high volume spike below us, and we have a high volume spike up here about 513. We look out here, let's say on the 30-minute profiles. Notice on Friday, we had a relatively tight range, and I'm going to go ahead and classify this as a D as in dog shape profile, even though it is a little bit longer of a tail on the bottom side. Now, one of the things that we talked about in Thursday night's video was the fact we are likely going to come back and re-auction this area right here. And that's exactly what transpired out here on Friday. Now, when we dive down, we start looking, let's say, at the futures markets, we can actually make the case that we have this upper channel taking place right now. We go ahead and we just connect the series of higher highs and higher lows. You can see we're on a path trying to make our way back up towards the prior week's value area low at 21,006. Keep in mind, we must break through this high volume spike, which we've been talking about during the live streams. And if you don't want to miss the next time I go live, make sure you're subscribed and the bell notifications turned on for all. But if we can get through this high volume spike, then one of the areas I do want to focus on is going to be 21,006. Then I also want to focus up here near the structure breakdown point, basically candle wick, right up here to the candle body. We breach that. Then we're looking up here towards the untested point of control. Anything beyond that, I'm really holding out for another new all-time high. Now, if we remove the drawings real quick, we look at the weekly volume profile levels. We have value area high coming in at 22,789.00. We have the point of control coming in at 20,615.50, with value area low being 20,544.50. Now, notice this past week we closed where? Above value area high. So that increases the probabilities that either this week or the following week, we are likely going to get some type of knee-jerk reaction and come back down and test that level. Now, in a shorter term time frame, we look at the 30-minute profiles from Friday. Notice we also closed above value area high, which comes in at 20,847.50. Then we have point of control at 20,821.00, with value area low being 20,775.00. Now, just like we talked about with the weekly profile, since we closed above value area high, I expect that either Monday or Tuesday, we will come back and fill that gap. And keep in mind, when I say Monday, that could even be Sunday night. I treat Monday's trading session as 6 p.m. on Sunday night, all the way until the close at 5 p.m. on Monday. So within the next 1 to 2 sessions, we should see the market come back and test that level. Now, when we zoom this chart out here just a bit, we also have an untested point of control up here at 21,097.25. And let's not forget, don't take your eyes off the prize. We have this untested value area low, which is an even higher probability target than the point of control up here, which really comes in somewhere around 21,050.25. At some point that will likely get tested. And as we go ahead and we grab our Fibonacci extension tool, we measure A to B equals C to D, and notice the 100% ABC level takes us right back towards that high probability target right over here at value area low. Now, when we look at the SPY real quick, you can see we're coming up towards the 78.6 Fibonacci retracement level. Now, if we breach that, it's going to increase the probabilities. We're going to go ahead and make a run towards all-time highs. In all reality, probably go ahead and set the stage for this A to B equals C to D pattern, unless we end up having a double top pattern play out. Now, the ABC pattern completes right up here at 616.18. So it's going to be critical. Do we take out the high? And if so, we're more likely than not going to go ahead and try to flush up towards those levels. Now, when we look over here on the 30-minute profiles, notice on Friday, we had a D as in dog shape profile. One thing we want to be mindful of with a D-shaped profile, the first way we break quite often ends up being nothing more than a trap. So watch out for the potential trap. Will we go ahead and break to the upside and then flush down here a little bit? Or are we going to simply melt down and then rally back up? We're going to have to wait and see how the market opens up. Now, we come over and look at the 4-hour chart for the S&P 500. Now, we talked about this during the live streams. 5983.75 has been tested. I kept shooting for the naked POC up here at 6015.75 in Friday's live stream. However, we failed to hit it. Notice also we have two hanging man candle right up here towards this rising trend line. And we're going to see, can we break or do we start to fall back down? We also have a case of low, higher low, higher low, higher low? Are we about to maybe break up a little bit more or pull back and set another higher low? We look out here at the daily profiles, basically closing right near value area high, which really comes in at 5990.50. The point of control will be 5987.50 with value area low being 5975.00. Now, one of the areas we were watching out here on Friday was this minus development area. And I want to say, if we start to see a little bit of weakness early next week, can we come back and potentially test this area? And that's going to be right around 59.60. If we break below value area high, I want to target the point of control. I want to target that value area low. Then I want to turn my attention towards that minus development area. You might also notice we have this point of control at 5899.50, which could provide a target as well. But before I want to worry about this, we must at minimum take out this minus development area. Now, if you guys want to see how I'm building back after the $2 million loss, make sure to watch this video right here.